Hi everyone, CBRE have come and released their inaugural quarterly residential property outlook report. That's a mouthful. What does that mean for us? It basically means that one of the biggest valuation companies in the entire world, they're listed on the New York Stock Exchange, got more than 130,000 employees. They're not just small little Ray White, right? They're a big deal. They've come in and told for the first time their expectations of which areas around Australia are going to perform the best over the next 12 months. So in this episode, I thought we'd deep dive that because they've surveyed almost 200 of their valuers who are on the ground valuing properties on a daily basis. Who better to get a boots on the ground perspective from? So if you're looking to invest or buy your next property or even sell or not sure to hold or not, this report in the next 5 or 10 minutes will be incredibly insightful down to a city level. Let's go. My name's PK and I help people build passive income through Property Investment Accelerator using data without needing a $15,000 buyer's agent every single time. This channel, we expose the reality of the economy, of financial happiness, and of the property market. Hit the subscribe button, hit the like button, let's go. So this report was just released from CBRE, and let's take a 3-month look back before we go to a 12-month look ahead. So in the last 3 months, their valuers that they've surveyed, 49% of valuers have reported strong or very strong demand condition in recent months. This has been particularly led by Perth, Adelaide, and Brisbane Metro. So demand in local markets over the last 3 months, you can see it's either mostly strong or moderate, with a few valuers, around 10% of them, saying it's very strong. And no doubt the strongest markets is Perth, Adelaide, Brisbane Metro, Brisbane Outer, Gold Coast, Sunshine Coast, and Tassie in that order, finished finally by Sydney Metro. Some of the comments that these valuers have made, which I think is very insightful, is extremely strong demand for first home buyer homes up to $800K range. This is on the Sunshine Coast. High demand for buyers for renovated or good quality homes in outer East Melbourne. Strong demand from population growth and ex-tenants looking to enter the market with rents rapidly increasing in inner Perth. That's interesting. Demand for houses and vacant land continues to strengthen in my local area in Adelaide South, and discussions with local agents showing reduced borrowing power having an impact on demand in Port Stephens in New South Wales. So it's not all rosy everywhere, and it gives you a kind of idea what's happening in these particular markets. Now let's look ahead at house prices over the next 12 months, and you can see most of the valuers are expecting prices to either rise by under 5%, more than 5%, or more than 10%. That's where this distribution curve is skewing very much to the right. And a closer look at respondents suggests that house values are expected to increase by 5% or more in all of these locations, but then more than 10% in parts of Perth, parts of Sydney. In Adelaide, it's mostly just sort of 5 to 10%. Parts of Brisbane are 10% plus, but mostly 5 to 10%. Gold Coast, Sunny Coast is 5 to 10%. Sydney Outer is 5 to 10%. Melbourne Outer is 5 to 10%. And Melbourne Metro is 5 to 10%. So if your area, wherever you live, whichever city you're considering, is not listed here, that suggests that it's not surveyed to increase by these people in the know. So overall, 78% of these valuers, these top-rated valuers, expect increases in house values over the next 12 months. In the eastern suburbs of Sydney, they're saying with increased building costs and timeframes, many purchasers happy to pay a premium for a renovated property. In the Gold Coast, they're saying continued strong market conditions have seen the recent values in my locality above historical levels. Okay, so it's not like post-COVID the regions are shrinking. No, they're continuing to actually outpace capital cities. In southeast Melbourne, they're saying that sales under 800K are doing quite well. In inner Perth, they're saying properties are selling above the asking price due to a shortage in stock and strong purchaser demand. I really see in Perth the price rise is led not only by the demand side, but I think it's mostly by the supply side. And in North Adelaide, properties are still seeing multiple offers on every single property. Now that was the demand side. Demand can be outstripped or dissolved by supply, therefore prices don't go up. So let's see what these valuers are saying on the supply side of the equation. 90% of them expect stock availability to remain the same or increase slightly in the next 12 months in their local market. So you can see increase significantly. This dark shade is 4%. Increase slightly, which is a good thing, is 54%. Now, I also want to remind you guys, an increase in supply is actually the status quo. Every year, there needs to be another 100 to 150 odd houses being built around Australia. So this very much is the status quo. It's if this dark shade was bigger, that would be a problem for house prices, but it isn't. And in fact, a lot of this chart is saying remain the same, which means it's going backwards really with increased population growth or decreasing. And if you look at the location by location analysis, it's showing that the areas with the majority of supply coming online, which subdues price growth, is Tasmania, where it's going to increase significantly. Brisbane outer metro, where it's going to increase slightly. In ACT, it's a combination of increase a lot, slightly, and the same. In Sydney metro, it's more sort of just increase slightly, which is kind of the equilibrium. Sydney outer is increased slightly as well in the main. Melbourne is mostly increased slightly, but also to remain the same. So you can see there's pent-up pressure in Melbourne. I wouldn't be investing right now in Melbourne, but it's one to watch because I think there's a lot of potential there, perhaps starting next year, but we'll have to wait and watch that. I still think Sydney will outperform Melbourne in 2024. And then the Gold Coast, Sunny Coast, you can see almost half is just remaining the same. So supply is not really significant. Perth is even more of a problem. More than half of this chart for Perth is either going backwards or staying the same, much like Brisbane Metro. And Adelaide seems to have the biggest problem where there's just hardly any increase in supply. So you can see the further down you are on this chart, the more likely house prices are going to rise. So Adelaide, Brisbane, Perth, Gold Coast, Sunny Coast, these are the types of areas that, you probably want to consider putting your money in if it suits your strategy. I also wanted to share this chart from Antipodean, which shares how savings ratio for Australia is finally, in the orange, finally started to tick up. Now, with interest rates rising, that means that people's savings ratio, how much they save from a total income perspective, has obviously declined starting late 2021. That's obvious with interest rate rises going on, etc., etc. But it's so interesting. Finally, they've ticked up, and that's not because of wage growth, but that's because people have tightening their belt and they're finally restricting their household budget. So that's a good thing in one sense, because it means that retail spending will come down and inflation will be subdued, and hopefully interest rates not going to fall back down to earth, but they might taper off, come down perhaps 1 or 2 notches in this year or next year. But it shows that now finally the sentiment might be shifting with people's savings ratio going up more towards investment purposes, or at least it's not taking the confidence out of the market. Of course, we need to see how this sustains itself. Sometimes you can get it to go up like it did here for the euro area, then it tips back down in the green. But certainly Australia is tipping upwards, New Zealand is tipping upwards, and the United Kingdom in the yellow is tipping upwards. All 3 housing markets have been rising this year across these 3 locations. Not to be confused with wages going up, like I just mentioned before. Quarterly wage growth in the private sector, not public sector where they have actually gone up, but that's a controlled market. In the private sector, which is more of a free market, this black line and this yellow line has actually trended downwards. And you can see, yes, it went up a little bit around COVID, but nowhere near inflation. The percentage increase was between 2 and 3%. And even historically, over the last 10 or 15 years, it's been very, very lackluster. So there's 2 pieces of information you should take from this. One, saving alone, no matter how good you are at your job, saving alone is not going to get you to financial abundance and financial freedom. You're not going to retire early just by working hard. And you might say, well, PK, well, that's all good and well. You're a property speaker, but how will property prices go up if wages are stagnant? Well, if you actually compare property prices, unfortunately, over the last 30, 40 years, there's no correlation between property prices in Australia and wage growth. And that's because of debt. Debt is good, debt is bad, you might say. Well, I say it depends on how you use it. Well, certainly in the Australian context, the ability to leverage has meant that house prices have continued to go up. That's one reason. And the second reason there's been this divorce from wages, wage growth versus property growth, is because of a higher inequality in amongst our society. So there's more rich people, even if the middle class, lower class can't afford, the rich can afford. That's the truth. Don't shoot the messenger. Okay, it's the game that we play in. You have to choose which side of that equation you want to be on. Even as an average income earner, if you can beg, borrow, and steal, so to speak, and get on that investment property ladder, then that is what's going to get you to financial happiness. Certainly not this wage growth trend, which is now coming back down. It was just a quick update, guys. Let me know what you think as well. I'll leave links below to my podcast, Oz Property Mastery with PK, on Google, Spotify, iTunes, to really level up your knowledge, and also my Facebook group, Australian Property Mastery with PK, on Facebook. More than 50,000 people. Amazing, amazing community. Let's have more data-driven, multi-dimensional, multifaceted discussions to expose the truth of what's really going on in Australia. Hit the subscribe button, give it a like, let me know what you think. Thanks so much.